Hey everyone, it's Mike Baltos from Orderflows.com, and this is the second part of the Tuesday, October 17th Orderflows market analysis. Honestly, I had some second thoughts about doing this. I wasn't going to do it because been getting some nasty emails from people, nasty comments saying, "Oh, there's no value in this." But you know what? I do know that for some people they do get value out of it. That's why I do it. If you're not interested in it, just click on something else. Your comments are noted, but I do get emails from people. That's what keeps me going, honestly, is the positive feedback. I can get 5 negative comments, but if I get that one positive comment from somebody saying, "Hey, you know what? It really made a difference in my trading," then that's means the world to me. That's why I do it. So a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Again, the tools we use in this presentation are the order flows trader, the volume footprint chart, the Delta Scalper, and the price rejector. So let's take a look at some of these markets. Now, if you remember in the first presentation, I had talked about the euro currency and that low that we had early in the European session at I think 117.92.5. Let me just get the chart up here real quick. Okay, so I'll show you on the bar chart really quick. If you remember, we had hit this low here. We had a few failed divergences on the way down, and I said, if we take out this low, again, watch out, market could sell off. We did take out that low around about 4:50 after 4:15 here. We made the low by a tick, and then we rallied back up. If you're a breakout trader, those are the breakouts that suck. But again, that's not the end of the world. You take your stop, you take your loss with your stop, and you look for the breakout again, and you finally got it down here at 117.92. We hit 91.5, and it just fell off all the way down into the low 70s down here. What was that? 74 was the low. So, I did feel this market did have a capacity to go lower yesterday, and it did. Here's the chart of when we broke the second time. So we had that first break here by a tick, then we rallied. Then we came down here at 117.83. You have the price rejector. You do have a divergence and a ratio. The market did rally up a little bit here, but mostly went sideways. You can see how you're getting these point of controls just lining up here. Then you sold off, went down, down, down. You got a new low down here. This low is interesting. 117.74. You came back down within a tick of it. You got a single print, another single print, and then the market put in a nice rally. You do have a divergence. You do have some trap traders down in here. That's what this green arrow indicates. And the market did put in a nice rally there. Now the other markets I want to talk about are the bonds and the 5 years. First we'll start in the bonds. Let me just get the bond chart here. And again, it's one of those classic trades that I talk about all the time. So, very tight range most of the morning. You sell off. This nice move down. Doom. Ratio. All selling balances on this move down. You get down here. You got a divergence. You got the Delta Scalper actually right on this low. Rally up from the low all the way up to the high again. Make a new high actually. But, what else do you have on this low? You got a divergence. You don't have a ratio. Excuse me. Excuse me. So you got your divergence, you don't have the ratio, but look to the next bar for the divergence, for the ratio, sorry, and you got it. So you got the Delta Scalper, you got the divergence, and you got the ratio in the next bar. Again, I say when you got the divergence and the ratio in the next bar, it's still a legitimate trade opportunity. And you can see, so even if you're getting in on the second bar here, or sorry, after the second bar, you're still catching a nice move. If you're getting in off the Delta Scalper off the low, boom, you go from the low up to the high. Those are the trades that you want. I mean, it's not like taking 10 different trades a day. You only need to take one trade if it's a trade like this where it rallies from the low to the high. Some people, they like action. They want to have 10 trades. They want to have as many trades as possible for some reason. I don't know. Maybe they want to put their broker's kid through school or something. I really don't understand that. It's not about the quantity of trades. It's the quality of the trades. So here's the 5 year. Similar. Strong selling coming out into the low. You got ratios, selling imbalances. You hit this low the first time, you got a ratio and divergence, and you got the price rejector giving a buy signal. Market starts to rally, comes back down, tests the low again. A boatload more volume trades now. Now you got 1,000 here. You even got 7,000. You got this big selling imbalance here, big buying imbalance. Delta Scalper, right around the low. Delta Scalper's kicking in. It's not on the low the first time. It's on the second time you hit the low. So, we were selling off. Strong negative deltas. You start seeing some things change in here, and if you know how to read the delta, you could pick it up. If not, you could see it in the Delta Scalper will signal it to you that it's changing from a supply-driven market to a demand-driven market. And again, you have everything giving you buy signals here. You've got ratio and divergence here, price rejector here, Delta Scalper here, point of controls toward the bottom, and you rally up from the 09 area all the way, you get up here to the close at I don't know what that is, 9.5, 10.5. So, even though it's a 5 years, okay, so, you don't get monster moves in the fives. You're lucky to get, it's four, from 09 to 10 is one full tick. That's 4 ticks in the, 4 ticks because they trade in quarter ticks. But, from 09 up to 10.5, that's 6 ticks. In 5 years in the market that moves slowly, you don't get, full basis point moves that often. Lastly, I'll talk about crude oil. Let's see if I got a crude chart. It's rollover week in the crude. Okay, so keep that in mind. So you might, when it's rollover week, you might not be getting as many signals as you like, because people are more the big traders are really a bit more concerned with doing their rolls, but so it's debatable if yesterday you should be in the November still, or already trading the December. This is the December. I think today, Wednesday, you should definitely be in the December. But it was interesting how you came down into this low here. Okay, well, here, let's just step back a little bit. What do you got? You got a lot of signals here, actually. This is the Delta Surge giving this nice little sell here. It went down about 10 cents. Delta Surge giving you a buy, another not much on there. Then you got Delta Scalper giving you a sell here, down into new lows. So you're short from 80 all the way down into the 50s. Then you got Delta Scalper off the low here, right? You got a divergence and a ratio. It's a zero number. It's a zero ratio actually, so it's still a ratio. It's blue, and you got the Delta Scalper giving you a buy. This yellow, I don't know if you could see that. That's actually that's the transition. I don't really talk about it that much because it doesn't really happen that often. And it's an indicator for the inner circle members. And so, but this low, this was a nice buying opportunity, this low here. And you can see how it made its nice rally up. Again, even if you're not buying it off this low, you're buying it in here around 66, 60, 65, between 65 and 70 in here. It's still giving you a nice move. It's, helped with the stack buying imbalance again, from 70 all the way up to, above $52, and, going into the 3 o'clock, or the 2 o'clock closes in here. I like to trade crude until about 2 in the afternoon. I mean, for me, most contracts, other than equities, close at, the cash sessions in these other contracts really is till 2 o'clock. But, I'm not a big fan of trading crude oil into 3 o'clock time period, even bonds and fives. I don't really concern myself at that time. But those were some nice moves. Then where are we trading right now in the evening session? Yeah, evening session we're trading. It's morning right now. It's 2 in the morning. It's trading 52.33. Okay. Ouch. This ink crawling on me. What else? Oh yeah, don't forget, I got this webinar on Thursday, the 19th, with Investor Inspiration. If you haven't signed up, you should. Might find something interesting in there. What is this? That's this DAX. Working on a new indicator. It's in the testing mode still right now, but it looks pretty good. Again, you know, this is, I'll show you something really quick here. If I could find the right chart. Just bear with me. Oh, Bunds. Bunds is the one I want to talk about. Where's my Bunds chart? Bunds, nice contract. Nice signals this morning also. On this high here, this beautiful high, you've got ratio and divergence. You even got the ratio in the next bar. You know, compare that to the previous high here where you just have a divergence. You know, you sell this divergence, it rallies back up. Here you got the divergence and the ratio, you got the selling imbalances. You got a lot of nice things in here, and you can see how this market sold off from this high 160, you know, here in this next bar around the 72, 73 area. You know, just boom, straight down to this area at 162.50, where you got some supportive buying coming in. You've got Delta Scalper giving you a buy signal here right off this. So you're coming down in here and you're starting to make this move back up. Again, a supply driven market is turning into a demand driven market. And this market, you know, it just goes sideways for the most part after that. I mean, sideways to higher, but mostly sideways. And right now we're in the new session. We're in the Wednesday session. But again, you know, here you got on this low, it's a 130, right? You know, cash opens in the Bunds at 2 a.m. Chicago time. Yeah, you do have a buy signal here. Then right around the cash open, you got the sell with the ratio and divergence. This one fails; it comes right back up. I felt this bar is kind of bullish. Sorry, bearish rather. Bearish. It didn't happen. But again, it's right around the 2 o'clock opening, the cash open. So, you know, what can you do? If you take it, you know, it just came right back. So we'll see how it's going to shape up in the Bunds. So, you know, so thanks everyone for putting up with my droning. I know some people don't like the sound of my voice, but hey, whatever. You know, you make your own YouTube channel if you don't like it. So thanks for watching this. To learn more about order flows, go to my website, Orderflows, or go to Delta Scalper to learn more about the Delta Scalper. And be sure to sign up for my webinar on Thursday. So thanks everyone. Have a great day. Bye-bye.